Hello traders, Gary Wagner here. Approximately 9 o'clock in Honolulu, 2 o'clock p.m. in New York City. It is Wednesday, the 18th day of January, and this is the daily report for gold and silver. Precious metals markets have had a nice turnaround this morning. We have the entire complex trading well off the lows and in fact trading on the highs. We are currently up in terms of silver, about 50 cents on the day. Gold showing a nice gain, up about $9.40 on the day. And I want to start with a 30-minute. It's an intraday candlestick chart. I did send out two market updates yesterday, and I wanted to kind of go through those very, very quickly. Had a little concern as this market came off of these highs and they started to really flirt with these lows, and I said any kind of a major break below 1645 and we want to consider getting out. What was the rationale behind it? Because if it breaks hard behind it, it's really going to break through what I consider to be some very, very strong support. Flirted, got down, as you can see. I put the call out after this low came out actually, and it flirted around, say, 1644, came back up. I sent out another notice when the market went up to about 1650, saying that it appeared as though we found good support. Not to worry, this will be my last report for the night. Flirted with it one more time, as you can see. That was earlier today, a 30-minute chart here. But if you look at these candles, we have had a concerted and very, very strong breakout to the upside as we're currently trading about 1660, 1661. The next chart I do want to look at this morning is a daily chart. It is in Henkin format. And the nice thing about Henkin format is pivot points, reversals become very clear. And as we trade a particular market and are involved in a trade, the just visual signals of seeing the green candles being long is something that really bodes well in terms of confidence within the market itself. Now, when we take a look at our current scenario, we have lost the lower wicks. They are still small candles, but traders, that's coming after a point when, by all intents and purposes, we had a consolidation that really could have gone either way. So as we go and approach these new areas and realize this will be the third attempt to take out this 1666, that is the high currently, and really go into what I consider to be a good solid level of resistance that will hit somewhere around 1680, 1685. And when we take a look at that from another perspective, I'm going to go ahead and pull up a daily chart again. What you see, this is that level, 1686. And when we consider really the target points that you'll get there, first of all, you get this top right in here. Market comes, you can see that you have supportive activity here. Here it's resistance. And there is some very logical history why this, in fact, would be an area that we'll have to look at and see if it can continue on this upward trend or if that's a point in which we'll conclude the first of 5 impulse waves, 1 through 5. I sent all of my subscribers a link to my most current KITCO commentary, which went live, was published this morning. This was one of the charts that I used, and the rationale or the reason that I really wanted to point this out is we do have, I won't call it seasonal tendencies because they're more a secular or a cycle that we're following, but we have noticed that this markets will go through a period of extended rallies and a multi-month correction. And we can clearly see when we look at this daily chart that this top, and this is 5 major 3, our correction of A, B, C, it contained a very valid wave count, the 335, which was what we were anticipating, and even more so, we were looking at a very, very strong possibility that we would get what's called a flat correction, meaning these two lows are around the same point. We did get that, and I thought that that is probably the most conclusive piece of evidence we have that technically indicates the correction is ended. We are beginning a new sustained rally. We're currently looking at our silver chart. Nice rally in silver. Of course, we're trading near the highs, but we're at 30.5. And as you know, I'm looking to see what happens at 30.80. 30.80, I believe, could in fact be some sort of a resistance. We'll have to see. When we look at this particular price point, you can see supportive action right in here. It's a valid target here also. So, my sentiment is, could it just barrel straight through? It could, but those are the points we really want to look at it closely. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.